everybody. Welcome back to another weekly market review for F45Trading.com. I hope you guys all had a great summer. My noticeable absence was basically due to a slow August. The markets were in a little bit of consolidation. Wasn't a whole lot to discuss for them, and so, to be honest with you, I just took a lot of August off, spent a lot of time with the family, and enjoyed my time because the markets are never going anywhere. And to be honest with you, I'm not one who likes to push things too much. And like I say, there wasn't a whole lot to talk about. I'll show you here in a minute, but I mean, U.S. dollar was pretty much, for the month of August, we were in this range right in here. So not a whole lot to discuss there, other than it's in a slightly downward decline. Taking out the lows, leaving the highs, and pretty tight ranges. So to be honest with you, if you guys are trading, you got to know when to kind of back off from the markets and when to go all in. And August was definitely not the month to go all in. August was the month to sit back and watch the markets, study it, see what it's doing, check out the economic news events that are happening, and gauge from there. And then wait until the market started to expand. So anyway, I didn't really want to bore everybody with weekly reviews that talked about the exact same thing all the time. So that's pretty much why I wasn't around very much in August. So anyways, we're back to it now. It is September. At the time of this recording, we are September 6th. It is Sunday evening. It's also Labor Day weekend, so I usually do my weekly reviews Sunday evening after market open, usually a little bit later, but my family actually left me alone here for about an hour so I could get this all said and done early, and but normally I usually don't do it until about close to New York midnight Monday morning. But anyway, regardless, this week here, as I say, it is Labor Day weekend for North America, so Monday's the holiday. It's a holiday for me as well, too. I'm out of Canada, and so I'll be enjoying that. So there's a bank holiday for the U.S. dollar, a bank holiday for the Canadian dollar, and there is some Australian dollar news on Monday. Tuesday is pretty much the economic calendar. It has absolutely nothing going on, and then Wednesday we start to get into some Bank of Canada high-impact news events, and we have the rate statement and the overnight rate. Now, currently, they're not predicting any change in direction of the interest rate, so they're planning on keeping it the same at a quarter basis point, not looking at moving that, so I can't imagine they're going to be surprising us, but you never know. The Canadian government is all over the place, as many governments are currently, are a disaster. And so who knows? They may surprise us. Anything's possible, but right now they're not forecasting any change. Then we go into Thursday. We have some high-impact news events for the euro and main refinancing rate, and then we have a monetary policy statement for the euro and ECB press conference as well too. That happens early New York Open, 7:45 and 8:30 respectively. And then we've got some crude oil imports on inventories on Thursday. Because Monday was a holiday, we have 1 day delay. They pushed that out to Thursdays for the crude oil inventories. I got a lot to talk about on crude oil, so this video is going to be a little bit longer than normal, but I'm going to try to keep it as short as I can because there's still not a ton to talk about yet, but we'll get to there. And then Friday, we've got some euro medium impact news events and CPI and core CPI for the US dollar medium news events. So I didn't bring up Forex Factory so you can look at that. You guys can look at that on your own. I'm actually currently having some issues with my screen capturing software. For some reason, I'm only able to capture my MT4 display, and I'm not able to capture any other windows. I don't know why. For whatever reason, the display driver or something in my system is not computing, I guess, with the software, so I apologize, folks. If you want to take a look at the full lineup, go to forexfactory.com. You can see what I was talking about there. And it's a pretty light load for the week, minus the Canadian dollar news events on Wednesday. So, okay, what are we looking at in the charts here? So we've got a continued consolidation on the U.S. dollar. Now, as I mentioned, we've been in a pretty tight range here since basically we started to get into this formation in here, and that started at the end of July. And basically, as I say, all 20 plus trading days of August have been pretty well sideways, a slight decline. Very reminiscent of what we have here, except they have been taking the lows each time, going lower and lower, slightly lower. And so they took the low rate here. For some reason, my keyboard commands aren't working either. They took the lows here, from here. They took the lows here and ran the stops here, and then they took the lows again underneath these stops here. Now, if you look back, we've now come back down into the, just about getting back into this old monthly consolidation back here. I believe this will probably be the target here going forward, going into September. Now, where they want to take it from there, I'm not too sure. I want to see how hard they bounce off of these, back into these levels into here. See if we bounce lower and then come higher. If you look on a weekly, however, though, you can see we pretty much just traded back into the high of this candle here, and we're seeing a little bit of a rejection thus far. So if you look at the weekly on the US dollar, if we start trading above last week's high, then I believe they're probably going to want to run these highs in here, right into here. You see that there, and that comes in at about 93, 95 to call it 94 even. I think that's probably a nice number to use. If we take out last week's high, then I think, and if you look on the daily, if we start closing above that, then I think this week here, they'll probably start to push it higher. We did have NFP last week, which gave us this run lower here. So that's kind of why I'm thinking we had one big swoop lower, and then prices steadily been running higher ever since. So we could see higher prices on the dollar. But at the end of the day, I think, I mean, there's just no way that the US dollar can maintain a higher price. I mean, they are printing money like it's going out of style, like absolutely every other country out there, a Federal Reserve, central bank out there. So that only devalues currencies, folks. There's really no way to get around that. I mean, yes, they're going to be pushing things around, and things will run higher and things will run lower, but ultimately the US dollar, it's going to start dropping. And I've said that before, and you've heard me talk about it, and I think we're going to see a period of deflation happen. And especially Fed's Jackson Hole news events that came out last week, which I'll just maybe get you guys to go in and read that report yourself and get some information on that. Very, very important. They're looking at letting the inflation levels basically manage themselves creeping back up. So what they're saying is that they try to maintain inflation under 2%. Okay, so what they're saying is they're okay if it goes over that 2% threshold. They're not going to start raising interest rates to try and slam it back down, which means a couple things. One, they're going to keep interest rates lower, and if not lower, I bet you they're probably at the same rates, if not lower. So we could start getting into negative interest rates with the US dollar, with the Canadian dollar. It's already negative interest rates with the euro and the Japanese yen, and just on and on and on from there. So if anything, they're probably going to continue the lower trend of cheap money. They cannot make money more expensive as it is right now, because then nobody will be going in to borrow money, and that's what they need to keep this whole merry-go-round afloat. You have to have cheap money circulating and an abundance of it, because that's going to encourage to keep people and central banks, and countries to keep borrowing that money and dumping it back into their systems. Which, don't kid yourself, everything that you see in front of you, the S&P, the Dow, the NASDAQ, all the European markets, all the German markets, all the Australian markets, I mean, the Japanese markets, and on. It's all artificially propped up, and it's just cheap money being dumped into the stock markets in each respective country, and it's just riding on a false sense of security. Who knows when it's going to come crashing down, but all we can do is take advantage of what we see in front of us now, and I currently believe. So we swept these lows here. Again, if I see price trading above the high of last week, which comes in, see the bottom of my screen there, high comes in at 93.23, call it 93.25. I believe there's a very good chance if we close above last week's high, we're probably going to make a run for the 94 levels and then possibly try to get back up into this range, up into here. Okay, so just keep an eye on that. I'm going to be watching Monday, Tuesday, Wednesday of this week to see what the willingness to go higher is. Now, what I'm also watching for to see if price on the daily shoots up above last week's high, if it does get up there, and then if it rejects very strongly immediately, which all that means is it's just taking out all of the short positions. So everyone who's short currently on the US dollar has their stops jammed up probably right above these highs here. If we see a quick run above it and then a rejection, that just means they're stop hunting, and we're going to see price continue lower. And if we do see continuation lower, then I believe the next area that we're going to be focusing in on is right in here, is that the highs of this old consolidation back here at mid 90 figure. Okay, so that's really it on the US dollar. It's just kind of it's still smack dab right in the middle of this consolidation. I mean, if you take a fib and you look at the fib from the low to the high, look at that, see? Boom, right in the middle of that range. So we're still just waiting for a little more information. I think we're going to find out what that information is going to be this week, and I think it's going to, this week or next week, it's going to shake loose regardless. There's a lot happening in the markets, and I mean, you can see just simply by the S&P last week. I mean, look what the S&P did, right? A couple of pretty big down days. So we hadn't seen a big down move like that since all the way back here in end of May, early June. It was early June, the first week of June, when this big slide happened here. Obviously pales in comparison to the massive downswing that we had back in the spring. But nonetheless, just be mindful of that. Now, S&P, so if you look at this, and I'm not going to get into a long tangent with this guy here. I had some equal lows in here that I was looking for price to tag down. They did that and completed this area here. So in my opinion, if S&P is going to continue higher, they should be doing it now. They ran these levels down here and a big rejection on the daily candle as well too. So I'm expecting higher prices. Keep in mind though, if they keep driving down for this low here, then we could be looking going back into the 32 range, back into here, and maybe even lower. I'm not going to forecast past that. We'll have to wait and see. But just keep that in mind. We could see price wanting to jam all the way back down to these old highs back into here at the, as I said, the 32 level. So just watch that. So that's, as I say, the only real movement we've seen in markets for August. And technically this happened last week into September. But you can see the US dollar was really unaffected. They ran the lows, rejected, and we had 3 straight up days. So we'll see what this week brings us. So watch those 2 levels, as I say. Watch the high here from last week. And if we get above that and we close on the daily above that, watch 94. Because I think, honestly, we're probably going to see price run up at least into mid 94, maybe even low 95s, if that's the case. Okay, if we run last week's high. If we pop above it and then reject and start heading lower, then again, I'm going to be short US dollar for the next rest of the month, basically, and we're going to be targeting the 90.50 levels. Okay, so EurUsd, very similar. Let me, well, I guess I don't need to clean up the chart. You can see it pretty clear. So very similar levels of consolidation again in here as the US dollar. It's kind of interesting too. They've really been leaving kind of a retail trend line in place here. Would be surprised if they started to smash through that here fairly soon. I'd like it to happen this week. If it does smash lower, obviously US dollar is going to go higher, so we can plan for that. Let me zoom in a little bit more here. But I've got an immediate level here for this week. If we start heading lower, I think they're going to run obviously last Friday's low, the previous week's lows in here, and maybe make an attempt to get under here. We had a nice convincing run up, 1, 2, 3 drives higher, ran all the stops, and again, it was stop running each time, and then we've started to fall off here. So I'm watching again, and I hate to sound like a broken record, but I'm watching these 2 lows on EurUsd. If we start breaking below those, the 17, call it about the 1760 level, if we start breaking below there, then I think I'm going to be targeting this low in here, these lows down here at, that's high 16, mid 16, 116s, I guess. And then from there, I believe price is going to continue to cascade lower, and we'll probably be down to the low 115s to high 114 levels. Okay, so that's where I'd be expecting price to go, somewhere down into this neck of the woods, down into here. So it's all going to depend on what's going to happen this week. If we fail to take out these lows, then we're just going to see price jam higher one more time. Now, on the upside, if we do start ripping higher on euro, watch the 1885 level-ish. Yeah, I'll leave it there. Watch this level here. They could certainly return, and we're not far away from that now, 1835, so really it's about 50 pips higher. I'm going to drop down to a lower time frame, basically just above these highs in here. What they could want to do, pardon me, is shoot price up just into this region here, taking these old highs out. So if anybody is short EurUsd, they're jamming their stop down into this range here. I'd expect probably a 10 to 20 pip stop run, which would take us just up into the lows of this previous consolidation here, and then possibly them to drop price from there. I am watching that to see what happens there. If we get back above this consolidation level in here, then I think it's going to be a pretty strong chance that they're going to want to just run higher, and this will be the next target. There'd be no reason to run these highs in here, if just to come back down again. They don't need to do that. But just a short-term run above here. And they don't even need to do this either, because they did run stops just ever so briefly on this candle right there. It popped above that one, and then they dropped it and ran the lower stops there. So they could easily just fall right off. They don't necessarily need to come up into this range. I am looking for it, though, to see if they have any willingness to do it. It'd be a great trade if they did, because we could get short all over that. And as I say, start targeting these lows, and ultimately these two equal lows down into here is what I'm looking for. So that's EurUsd. So we'll see what that happens. We'll see what happens with that market. And I'm going to clean this guy up just a little bit because it's a little messy, especially when I get into the daily. So GbpUsd, we have an old high rate in here. They just failed to get above that, and they really sold off quite quickly. Look at this giant doji they have here on the daily from last Friday. Just a massive push down into this area and a rejection, and it closed right on the open of the day. So this pair here is showing a little more strength, in my opinion, than what EurUsd is showing. As you can see, EurUsd has just been consolidating, similar to what the US dollar has been doing, where GBP, yes, we did consolidate here, but we had a nice big breakout towards the end of August and into September, into here. And then we had some weakness the first week out of the gate into September. But I'm kind of looking to see if we start diving below here, not a problem. I think it's going to be an easy run below here. Not going to be a straight shot, I don't believe, but I think ultimately lower targets will be the the focus for GbpUsd. So I'm watching again. I hate to sound like a broken record again, but I'm watching last Friday's low to see how much it wants to get below there. If it does, if we close lower on the daily, then I believe the shorts are going to be on, and I think we can easily target the 12900 level would be my target on the downside. So about 300 pips, 350 pips away from current location could be a nice trade. I don't necessarily think it's going to get all the way down there this week. It certainly could, but I'm just saying if we lose this low on Friday, I think my eyes are going to go to there, and basically a nice sweep below these lows underneath here is sort of what my thoughts are going to be. Whether that gets it this week or not, I don't know. It might be a multi-week trade, but ultimately I think my eye would go to about that level there. So I'm watching this candle here. If we fail to get below this candle on Friday, in my opinion, that is pretty good for GbpUsd, and we could see a pop higher, in which case I'll be targeting this high up here. Okay, so I'm going to wait and see how this week opens up, and away we go. And keep in mind, there's no rush here, folks. A lot of the big money's just finally starting to get back in from being off for the summer. So it's going to take a week or two for the money to kick in and to step in, and we'll see what they want to do with it. But there's definitely no rush. Euro GBP is, I believe, going to head down below these lows here, And so I'm going to put a price tag here. And so if it does get below, now this is why I say again, I think GbpUsd is a little bit stronger than Euro because of the decline in this pair here. Now, what they could elect to do is hold GBP sideways, GbpUsd sideways, and not really go too much out of here, and then come in and really sink EurUsd. Okay, so that's what they could have on tap if they sink this lower and you don't see any movement higher in GbpUsd. They'll be taking EurUsd lower. Okay, so just keep your eye on this pair here. We had a nice little retracement off of these equal lows here, and so everybody in their brother is thinking, well, okay, equal lows, equal lows, equal lows, another bounce. This is a huge area of support. This thing is going to push price way back up, and I think ultimately they're going to come lower on this pair here, but it's just going to remain to be seen which one they manipulate, if it's cable or fiber between the two, and short or long either way, but watch this pair here, okay? USCAD has an interest rate decision this week, and they're really consolidating it in anticipation of it, so this thing is going to release pretty hard. We've got some lows, old lows down here, in my mind would be the target. And but at the end of the day, if the US dollar does start to move higher, it's going to make the Canadian dollar pretty tough to go lower. Also, in combination with this, crude oil is weakening right now. It's pretty weak. Canadian dollar, the UsCad should not go lower if those two factors come into play. Higher US dollar and weaker crude oil means higher UsCad. Okay, so we may not see any more lows in UsCad yet for maybe the next 3 or 4 weeks, if that's the case, until A, crude strengthens, and B, US dollar weakens, okay? But they are consolidating here. You know, what do they want to do this week? Well, you know, I don't know. It's just kind of a slow, methodic decline. We really sank lower into here, and then price so far hasn't wanted to make a new low yet. But we'll see what they want to do here on Wednesday. After Wednesday this week, I think we can make a pretty accurate call on UsCad, so I'll wait till then. Australian dollar, again, you know, very similar to what we've seen with the with cable or GbpUsd. We saw a nice big push up higher, and then a bit of a rejection coming back down into this old consolidation area here. So just watch this area, folks. If we start diving in again, you know, past Friday's low, then we're going to come underneath this consolidation here and possibly under this low, which we can obviously trade, but it's just going to kind of depend on what the US dollar wants to do this week. So I'm going to be watching for that. But a push higher, obviously it could lead us right back up into here. If we do start to weaken a little bit, I wouldn't expect this thing to go all the way back down to this low here or anything like that. I think we've made an interim low here, but certainly we could see this move back into this downswing into here, and you know, maybe come back into possibly the you know, 0.67, 0.68 level, possibly, you know, if we do see a little bit of a decline. But we'll see how that goes. You know, maybe even the level in here, these two old highs, 3 highs in here, that could be the target for it on the downside if we do see a momentarily you know, counter trend swing lower. We could see that, but you know, we'll have to see. This thing has been pretty bullish here, so I definitely don't want to discount that and start to counter trend trade. I'd like to remain bullish, and I think that's where the best trades are going to be. But we'll see what the dollar wants to do. Obviously, US dollar higher equals Aussie lower. Okay. If it's doing something different, if Aussie is also going higher as the US dollar is going higher, it means the markets are not in sync, and you don't want to be trading that because they're going to be very, very unpredictable. Okay. That's it for Forex. I'm going to briefly jump over to crude oil and run through this market real quick. You can see we've had a big decline, and if you were part of my membership group, I would have told you about these lows here. As we're slowly doing nothing in this market and just ever so slightly creeping up, I had these lows, these two lows here on the chart for about the past, well, since July, obviously, and saying that they're going to run below those lows, and we actually, just at the time of this recording, as markets opened up this week, got that. So that is a big check mark right there. However, my thoughts going forward on this market are continued weakness. There's a lot of floating storage out there that has been really not discarded, but not discussed the past in the summer, as we've seen this nice ramp up into here. It still exists. There's a ton of floating storage out there. It doesn't look like China's economy is getting back to full swing. It's the full swing of things quite yet. I think there's still going to be a little bit of weakness in this market going forward, at least for the next probably 2 months into November. After that, and seasonally and historically, the crude oil market sort of peaks at the end of September, kind of early October, and then it has a pretty significant decline going into the last quarter of the year. So I am not bullish on crude oil currently. I have not been bullish on crude oil as price basically came into the summer, and I said that very openly. You can go back to my old previous free recordings that I've done on my YouTube channel and see my comments earlier on crude oil if you'd like. And I was never, super bullish on this market, and especially as we were sitting going really nowhere, I said be careful with crude oil because I think we're going to see that run down, and we got that the past 3 days, 4 days. She's been crashing. So I think there's further continuation lower that we're going to see, and I believe these lows in here are what we can look for. So I'm just going to highlight those and we drag this out. I think this area in here is what the target's going to be. So I honestly believe we could see an $8 loss easily on oil. Is it going to happen all in, a couple of days? I doubt it. They're probably going to slowly leak this thing down lower over the remainder of the month. And, or we could bang around in here a little bit, but I definitely don't see this thing going much higher than what we're at. That's for sure. Especially with all the additional supply, floating storage, and everything else that's out there, the weakness in China and everything else. Yes, the shale oil in the U.S. and all the heavy oil in Venezuela and everything like that, it's all being affected and prevented from getting to the market. But at the end of the day, if nobody's using a ton of oil right now, this market is still not going to go higher. Now, I've been reading a lot of economists and what they're actually saying, a lot of material from a lot of economists. And what they're actually saying is there's a lot of predictions right now that crude oil is going to next year be up around the 50 to 55 mark. So that basically puts us right up into this range, back into here. Very, very possible. I think we're going to see prices run lower before we get in to that range, and we've got to bottom out one more time. I don't think we're going to come back below here again. But I definitely think we're going to see, that low 30s, possibly higher 20s before we get out of this mess, and then we start to see crude oil increase. And historically, crude oil doesn't do a lot of movement until about the first quarter of the year. So I'm going to hold off on crude oil until then. We could see some shorts though, so that's kind of what I'm going to be banking on. I'm definitely not going to stay long on this market, be bullish on this market yet. Until we get through a lot of that extra storage capacity. And then once we sort of clear that, then we can shift our focus. But until now, looking for shorts on oil, and I'm thinking waiting for this week to open up a little bit more, but I'd like to see them run back up and hit 40, reject off of 40, and then run lower. So something sort of like this. So that's what I'm looking for on crude oil, and we'll see if that pans out and see how much lower we can get her. And honestly, now that this area has been cleared out, I believe the next target of focus is going to be these lows here for this week. This is my prediction on the week. Ultimately, these lows here would be more so for into October. But I think $37 is going to get reached on crude oil this week. And finally, gold. Gold, unfortunately, is still doing nothing. I was really hopeful that we were going to see just accelerated growth higher on gold. Haven't seen it. Just been sitting sideways. I've so wanted to get long on this market and just stay long on it. I did not. Obviously, I was long up and through here. And then we saw this huge decline, and I actually got out of my long positions into here. We saw a couple more upticks in here, which no big deal, missed out on. But then I said, this market needs a correction, and we got a correction in stunning fashion. We lost about $300 on the market in about 4 days, so very impressive to see. Do we slam down? Is this a big bear flag that this thing is working its way into? And for all of you, bear flag obviously is just something like this, right? Right there. Is that what we're working into? And then price is going to fall off from there. I don't know, to be honest with you. We're gonna have to wait and see. It's an election year, obviously, for the U.S. and gold is pretty heavily tied with U.S. obviously. U.S. dollar, and I would be surprised if we see a bit of a decline in here one more time and then just coming down once and for all, because everybody wants to be long gold. Think about this. Everybody's talking about gold. Everyone said get long gold. It's going to be going up to 2,500, 3,000, 5,000, whatever the target is. I'm not going to speculate one bit on how high it could possibly go, but I believe with the continued printing of money globally, you can't not have higher gold, because everyone's going to start flocking to a more stable, secure form of currency or of monetary value. And gold is it. Gold and silver, that's it. So I think this is going to go higher. Do they slam this thing down because it's highly manipulated one or two more times? Absolutely. I think it's going to happen. So until we start breaking back above this consolidation area, I'm not going to be looking at any long gold positions. Or unless we see another big sell-off, a big drop, then I might be looking at picking some longs up there. But until then, or if we trade back down into this range here, this would be my... If we traded back down here, I'd be surprised if it did. But if we traded back down into 1800s, then maybe I might be looking at picking up some longs there, because I don't believe they're going to sink out anymore. And everybody has been getting long in this market, and all they're doing is coming back down and picking up more orders to go long. That's all they're doing. Everybody has been talking about gold, a lot of retail traders, so I think they're going to come slam it down one more time to shake loose anybody who had any long positions in here, grab all that liquidity and then run it higher. So that's personally my opinion. They could just shoot it straight up higher from here, in which case I'd be wrong. Not a big deal, because I could always get in here or above this high, no big deal. But definitely I'm going to hold off on gold for a little while, and you guys should too, at least for another maybe 30 days. We'll see how things look kind of getting into October and then going from there. But I think it might be on kind of shaky ground here for the next little while. So anyway, that's my thoughts on the week. I apologize for the extra long session today. But, I'm kind of making up for lost time. There's a little bit to talk about, obviously, and because I've been away for the past couple of weeks, not doing any videos. So I apologize if you guys have been, watching that and counting on that to help your trading. I apologize I haven't been around. But to be honest with you guys, I don't believe, in my humble opinion, that the markets were really all that worth trading this summer. And, there were a couple of trades, obviously, that, my members got in our group, a couple of commodity trades that we were looking at that panned out absolutely beautifully. You get that at f45trading.com. You jump on my website, you can check out all the options in there. We've got a great little group in there, and there's a lot of information. So like I say, we weren't completely on the sidelines for the month of August, but definitely we were very, very selective on the markets that we were trading through the month of August. And you would be able to benefit that if you were a member. So you can go check that out if you'd like to. Other than that, I will be back for another free market installment this time next Sunday. You can watch for that. If you haven't, please click subscribe down here in the bottom right-hand corner to my YouTube channel. Share this out to your friends. I would really appreciate that as well, too, getting the word out. And until next week, I hope you guys have a great, profitable week. We'll catch up to you then.